Hello everyone, this is Alia Noor, Associate Partner, Taxation and Compliance Advisory Services, Ahmed Al Agri Chartered Accountants. Today we are going to discuss the most awaited Free Zone Corporate Taxation Guide regarding the distribution activity. So if you are engaged in a distribution activity and you are incorporated in a designated zone, you can avail 0% corporate tax regime and you will be considered a qualifying free zone person in four scenarios. Either you are doing a high sea sales, that is third port shipment, or you are engaged in the distribution of goods or material in the UAE. You are engaged in the distribution of goods or material from the UAE, or you are engaged in the distribution of goods or material within the UAE. In first instance, now consider you are engaged in a distribution activity and you are incorporated in a designated zone and you buy goods from a manufacturer in country A and you sell those goods to a retailer in country B. However, the goods are shipped directly from manufacturer A to a retailer in country B. These activities fall under qualifying activity and the distribution company earns profit or margin on those goods sold to the retailer in country B will be considered as a qualifying income. In second scenario, if you're engaged in a distribution of goods or materials in the UAE, for instance, you buy goods from country A, but these goods are imported in the designated zone, and from this designated zone, these goods are sold to a retailer or the distributor who is not an end user. Then, whatever the distribution company earns profit or margin on sale of these goods to retailer will be considered as a qualifying income. In third scenario, if you are a distribution business and you are engaged in distribution of goods or material from the UAE, that means you buy goods from a judicial person in the UAE, which is outside a free zone, and the goods have been either manufactured in the UAE or imported in the UAE by another person. Whenever you sell these goods to a retailer, distributor outside the UAE, whatever income you earn from the sale of these goods to a retailer will be considered as a qualifying income. However, the goods or material are shipped directly by the manufacturer or the importer to the retailer distributor without passing through the designated zone as the goods were already in the UAE. Now, in last scenario, if you are engaged in a distribution activity and you distribute goods or material within the UAE, that means that you buy goods from a judicial person in the UAE, which is outside a free zone, and those goods have either manufactured in the UAE or imported in the UAE by another person. And then you sell those goods to a retailer or distributor in the UAE, who is outside a free zone. The income earned from these sale of goods to a retailer would be qualifying income. However, these goods are shipped, transferred by the manufacturer or importer in the UAE to the retailer or distributor in the UAE outside a free zone. Now, the key features here should be that the distributor should hold the title of the product that differentiates him from the logistic company, and goods must be resold or processed for resold that are not used by an end user. In this case, the distributor company has to obtain an undertaking letter from the client declaring that they are not the end user. Now, distribution activities as per Free Zone Corporate Tax Guide includes activities such as purchase and resale of goods, warehousing, transportation, delivery, logistics, inventory management, order processing, packaging, and repackaging. Whereas there could be ancillary activities that complements the main activity that will also be subject to qualifying income, such as marketing and advertisement, quality control inspection, and customer support services. So this is for the distribution activities. Stay tuned for other updates on free zone activities that can be subject to qualifying income. Thank you very much.